Hi, everybody. My name is Bennett Tchaikovsky, and welcome. We're now going to go ahead and do so for my fall 2025 financial statement analysis course. I asked my students to basically to do two companies that are in the same industry, which I will not do again for various reasons. But it's going to be Dollar Tree and Dollar General. So let's go ahead and take a look at these companies. So we did Dollar General, and there's basically, I did that one. So now we're going to take a look at Dollar Tree. Okay. So we got Dollar Tree here. And I think I got some emails from some angry students, but when we have a challenging situation, we have to kind of go through and come up with kind of make our way along with it. We got to make this up as we go along, just like Indiana Jones. And when I go ahead and look at the financial statements, I'm going to go ahead and look at consolidated income statements. And oh boy, I'm getting something called discontinued operations. Ooh, it's scary. Now, this is a great learning lesson. What are discontinued operations? Well, if you've taken the first semester of intermediate accounting, right, and discontinued operations, there's an inherent assumption when we are preparing financial statements that everything is continuing. And when we look at this right over here, so if I look at Dollar Tree or Dollar General, which was our other company, let me just pull that up. So Dollar General, which was the one I just did, you kind of look at this over here of Dollar General, and I look over here, and the income statement just looks very, very clean. There's nothing about discontinued operations, right? So there's nothing here where it looks like we don't say income from continuing operations or income from discontinued operations. Now, when management basically makes a decision to say we are no longer going to be in a certain type of business, there's going to be a couple things that's going to have to happen, right? So management is going to basically go to the board of directors. Management's going to go to the board of directors and saying, hey, we are making a strategic shift. If I was a board member, I would want to say, okay, management, why are we going through and trying to do this? And it's basically saying, well, we're doing this one particular operation and things are not working out. So as a board member, what I may want to do is kind of look, and hopefully I've been keeping up with industry trends, industry updates, everything else along those lines. And so when management comes and say, hey, we're making a strategic pivot in our operations, or we are no longer going to continue operating this segment of our business, all of a sudden we have a crisis on our hands. What's the crisis on our hands? It's not really a crisis, but it's a disclosure issue. Well, the disclosure issue is that, again, when I'm doing my income, when I'm preparing income statements, the inherent assumption is that everything is from continuing operations. I don't have to say it, right? It's almost kind of like I never have to go through and say it. But if we make that strategic decision to say, okay, we're no longer going to operate this segment of our business, what we then need to do is to say, okay, we're going to pull out all of that discontinued operations from what we're now going to call our continuing operations. So when you look at this, right, if I go through and look at this of sales, other revenue, SG&A, operating income, and now we're getting to income from continuing operations before income taxes. So this is alerting the reader, right? Very, very important. Alerting the reader to saying, hey, this is what we're currently operating. Because once we've made the decision to not continue to operate a particular segment, we can't show that as income, as traditional revenue. Rather, what we need to do is to basically, once we get down over here, our provision for income taxes, we get to our income from continuing operations. Then we're going to basically subtract out our income or loss from discontinued operations net of tax. That's a very, very important number. And why is it net of tax? This income from continuing operations has already had income taxes deducted from it. So over here, we need to show the same. We have to show this number less the income taxes. And then that's going to get us down over here to our net income. Well, guess what? The fun doesn't stop there. It continues on because guess what? For earnings per share, we also have to do the same thing. We also have to say, oh, here's our continuing operations, earnings per share, discontinued operations, earnings per share, but our total earnings per share. And why is this so important is we're telling the reader, it's like, hey, oh, we're getting this little bonus from our discontinued operations, but we're not going to be operating this forever. We decided not to do this anymore. So we're basically not, we're going to separate this out. So user, don't expect this in the future. Okay, so that's what we're kind of going through and dealing with. And I know for many of my students, this was very frustrating. Just know that I'm going to be very lenient in terms of how I go through and grade this. But again, it's something that's really, and this is why this class is great, because the more you step in and you analyze financial statements, every company is different. And one of my 1B honors classes, one of my students had a company that had a 16-weekend. And I'm like going, dude, there's no way. No, but it can actually happen. You can have a 16-week and then 3 12 weeks, like go figure, right? But that's how we go through and learn things. So let's go ahead and we're going to kind of do the same thing we were doing before. So I'm going to come over here for my Dollar Tree trailing 12 months, and I'm going to go ahead and start doing some copying, right? Because the Securities and Exchange Commission, they encourage plagiarism. Well, what do I mean by that is that they're really going through and they're kind of saying, well, once you've kind of gone through and if someone else has kind of taken the time to hire the big attorneys or the big accountants, we encourage you to use similar disclosures. So we just pulled that first one right over here. Let's now go ahead and go to the next one. And we're going to interactive data. And let's go ahead and go to our financial statements. Again, we're seeing this discontinued operations. Okay. And I'm already seeing that we're going to have a little bit of an issue in terms of lining things up. Looks like some kind of transition services agreement. So we're going to knock this down right over here. Basically take this and move this down right over here. So there's something with a transition services agreement. And if we wanted to find out what that was, we could obviously look at the footnotes to the financial statements. Okay, so let's go ahead and do the next one, which is going to be our annual report. Annual report, go to interactive data. Going to go to our financial statements, consolidated income statements. Okay, so now what we're getting is some good juice here. And the good juice we're getting here is, well, boy, oh boy, we're getting some restatements here. This is exciting. This is going to probably make our life a lot easier to go through and handle. Because when I go through and look at this, this is basically now showing us the income or loss from discontinued operations. Basically, they're taking a huge hit right over here, basically for that year end. And let's go ahead and copy this in and have some fun with it. Okay, I'm probably going to put this on a separate one just because this thing is so gigantic. Okay, so right over here. Okay. Okay. So let's go ahead now, and then let's take a look at this part over here. Okay. Okay. And finally, let's go ahead and copy this part over. Okay. So let's kind of take a look at this a little bit more in depth. And let's go ahead and go through and read through this. Okay. So when we got to the income statement, and the one other thing I want to kind of look for is that obviously the discontinued operations occurred between the third and the fourth quarter. And how do we know that? Well, for the 9 months ended 11/2/24, everything seemed to be like it was regular because we did not see anything from discontinued operations. However, in this part right over here, we're now getting into the concern of discontinued operations. So let's go ahead and now kind of play around with this and see if we can find some additional information. So what I want to do is I want to kind of go through and look at these companies' 8Ks. What exactly is an 8K? Well, an 8K is something where if we get into a material transaction that we have to go through and kind of like basically say to the world, is when we kind of go through and look at this, results of operations and final financial condition. Got some people leaving the company, financial statements and exhibits. So let's just go ahead and take a look at this filing. And so you got right over here, results of operations, issue a press release reporting the fiscal third quarter. So everything seemed to be fine at this point in time. So that one looks relatively normal. Then we have over here, let's take a look at this filing of this 8K. And this is also departure of certain officers and directors. There's another resignation. Basically, they changed their bylaws, which has to be filed as part of an 8K. And then we're getting over here to yet another current report. And again, why do companies release 8Ks? Well, the 8K is going to be something that when you are an officer or director of a company, you are limited in terms, it's really going to be the officers. As a director, you really shouldn't be talking. But as an officer of the company, what you're really kind of going through and doing is you're telling the world, to the investment community, if you're public, this is what's happening. However, I cannot say anything publicly unless I have you can't selectively disclose. I can't tell one person without telling, everybody, and you'll get in big trouble. Not worth it, right? It's like when we're at bat and there's a prop bet. Oh no, excuse me, we're not going to go there. So we're playing basketball. So when we go through and we look at this, what the function of the 8K is, well, if we have this material information, we have a certain number of days to disclose it. So then it's no longer insider information, meaning everybody in the world knows about what is happening. So let's take a look at this one right over here. New CEO, been serving as the interim. Press release, okay, that looks good. And let's go ahead and take a look at this. More people resigning. So basically have over here, Dollar Tree and Lawrence Gatta step down as Chief Merchandising Officer for Family Dollar. It's okay, right over here. So again, if someone's resigning from the company, you want to, if they're an important person of the company, like they've been going on and talking with investors, it's probably a good idea to go through and disclose it. So let's go ahead over here, and then we've got, okay. Okay, so portions of the exhibit, executive agreement. So again, this is another contract. So let's go ahead and come over here. Okay. Greetings. So this is more people. Okay. Changes more bylaws to increase the board of directors. We're going up home. Okay, right over here. Okay. Then we come over here to 3/5/25. Now notice, like, when we look at when the 10K was filed for Dollar Tree, we're still basically where we know that it came in between the filing of the first quarter and then basically sometime over here at year end. But now we're getting over here to, let's go ahead and read this again. So we're getting a new Stuart Glendinning, CFO. Okay, annual base salary of $950. Good thing to be a CPA. Well, we can figure it out later. Okay, conference call for its investors. Okay, so nothing really big at this point, and this has got to be where the juice comes in. The OJ has got to come out. Okay, let's take a look. Okay. Okay, here we go. Exciting, exciting, exciting. Also, March 26th, Dollar Tree issued a press release that it has agreed to divest its Family Dollar business. Okay, and let's go ahead and take a look at this. Citing. Okay, so right over here, divesting its Family Dollar. And what we really were trying to find is when we go through and look at this, and I'm going to show you basically how to kind of get to the numbers we're trying to get to. And I realize that this is taking a long time, but I want you to kind of, like, for those of you that are in my class, this is the kind of crap you have to deal with in real life. It's never simple. Okay, so revolving credit facility, termination. Really what I'm looking for here is I'm kind of seeing is that, did the company help me out by going through and, okay, this is just for the sale of their business. Okay, then over here. Okay. So this is by going through the 8Ks. I think, again, this is really a matter of we didn't get what I was actually looking for, which I think they already gave to us, is to kind of talk about, like, what is the amount of the income, right? What was the amount of for Dollar Tree? And they kind of gave this to us where they're kind of now saying that are looking at, I guess they got rid of Family Dollar, but really what they're kind of going through and doing is they're basically kind of restating for us what the operations are. And another way we can kind of go through and look at this is that if I'm going to look at all 10Ks and 10Qs, I'm going to go back in time a little bit more. And I'm going to take a look at their financial statements back here from February 3rd, 2024. And there's a reason why I want to do this with you, is because I want to see how this ties into this whole thing that they went through and filed. And if I come over here to essentially, so if I come over here and I'm going to look here at February 3rd, 2024, this is obviously February 1st, 2025, but as you can notice over here, the total net sales, this does not match basically with this number over here. So this number here does not match this number. And the reason is because this has now been restated. However, the number that should match is basically going to be this net loss, right? So right over here, this net loss has to go through and match. Now, what exactly changed, right? What exactly changed with basically with these two different parts? Well, obviously the net sales, this is now the difference between these are roughly about 13 million. So, the difference between 30 million and 16 million is now going to be showing up down here as income from or loss from discontinued operations. Or basically, we're now kind of going through and restating basically these parts down over here. So what you're seeing is essentially a reclassification. So when we go ahead and look at these numbers, right, we're kind of going through and basically reclassifying them. So so this is now going to be our income or our net sales. We're now looking at things from continuing operations. Okay. Now, what's the problem with me giving this to you basically as an assignment, and why I'm going to be very, very generous in how I grade this for my class? Well, unfortunately, and I may have not just been looking carefully enough, but in order for me to do a true trailing 12 months, like this part over here, I would need to have, well, I have my most recent quarter, right? This part over here. I have my most recent quarter, basically of like the sales and my discontinued operations. I have over here, and I forgot to copy this. Just give me one moment. I have my most recent quarter over here from basically from 5/3/25. But what I'm kind of challenged with is that, well, I don't have basically the information, right, that gives me the breakdown that I need accurately from this. However, what Dollar Tree has provided me at the moment is some important numbers, is the income from continuing operations. So they're basically now showing me that, oh, if we're going through and doing these restatements, for me to get trailing 12 months, right? There's no way for me, because they're not giving me, it's kind of sucks. They're not giving me this data that I need. These are not the droids that I am looking for, right? However, what I could do as I'm looking at this is I could say, well, right over here, and go ahead and do this. And this is probably going to be about as close as I can get. So if I know that for the 12 months ended 12/1/1/25 2/1/25, if I know this here, and then I also know that essentially for Dollar Tree, that my 6 months ended 8/3/24. Was right over here. And obviously there's a number that is not lining up, which I would have to go through and figure out right now. Just give me a moment. So what I can do, and by the way, what it was is I transition services again. So what I'm going to do is I'm going to say then, well, my 6 months ended, trailing 12 months, 2/1/25 is going to be over here. Oh, by the way, I really don't like what they do here is they don't show gross profit. This absolutely drives me bananas. Okay. 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 Discontinued operations. Okay. So for the 6 months ended, my basically my loss from basically my discontinued operations is going to be right over here. So if I now basically take this trailing 12 months, 6 ended to 125, and now I'm going to say, well, my first quarter here of and let's go ahead and copy this down. So right over here. So my 3 months ended. Okay, and this is that transition services. I'll just go ahead and put this up one. Okay. So this is going to be my fourth quarter trailing 12 months. 8/2/25 for Dollar Tree. And then my third quarter trailing 12 months as of 5/3/23. And again, we've got these transition services. Okay. So exciting. Okay, this, by the way, is 6 months, 8/3/24. Okay. And this is full year ended. Okay, and so let's just kind of play around with this just a little bit just to make sure we're on the right track. So our net income loss, basically for the fourth quarter, if I added these two numbers here together for the 3 months ended 3/6/95 and then 2/33/30, I get 3.4 billion. And that's what we're getting down here. So if I'm looking at this from just adding up these numbers, that's how we're going through and getting it. So now, now to go through and do the big part, which is my trailing 12 months, 8/2/25. I'm going to go ahead and add up all these together. Cost of sales, SG&A, my transition services. So my operating income is going to be my revenues minus my cost of sales, minus my SG&A, minus my transitional services. And then over here, my interest expense net. Then over here, my income from continuing operations before income taxes is going to basically be on operating income. I got other expense, income or expense and net. Sorry about that. Right over here. Okay, S equals. No, it does not. Hold on. Why am I off? Other income expense. So this should be 147. Operating income. Hold on, is this right? Nope. It's off here. That's good. That's good. That's good. That's good. That's good. Okay. So my cost of sales, my SG&A, we said that these were okay. My transition services. So my operating income should be my revenue minus my cost of sales minus my SG&A minus my transition services. And why am I off? Oh, this is income. Okay, so this is going to get added back. So this is basically going to be what are transition services? I'm guessing it's how much Dollar Tree is charging to Dollar General, right? So this is going to be 18,551 minus 11,904 minus 5,175 plus 8. And that's how we get to that number. Okay. So now, so these are correct. So my interest expense, other income. So this is going to be there we go. And so then my provision for income taxes. Okay, and then my loss from discontinued operations net of tax. Off again, but let's just figure this out. So this is going to be should be fourth quarter, this quarter. Right, we check this number. So then 1101. Okay. All right, so now we get down to the questions of the basic earnings per share or loss per share. So again, we're going to kind of take a look over here at what our weighted average shares outstanding kind of look like. So between the fourth quarter trailing 12 months, and then you've got the full year, what we're really kind of looking at is a difference between these two of roughly 2.1. So this is not really material. So I'm going to go ahead and basically say, I'm going to add these two up together. And the reason why is because it's basically doing for the full quarter. So I'm just going to basically, when I'm going through and doing this, I'm just doubling it. So when I put it in towards like a weighted average, I'm just going to count it twice. That's actually not the number of shares outstanding, but just from a weighted average perspective, that's going to give me hopefully a better number. So when I go through and do my continuing operations, this will be over here of roughly about 516. This will be roughly over here of about a loss of 18. So then my total is going to be a loss of 13. My diluted okay. So let's kind of recap. And I know this video is going on probably way too long, but it did give us some pieces of information that were really good. The first thing we saw on the income statement was that it basically provided for us a 12 months ended with the discontinued operations. What I also had as well is I was given a 6 months ended from 8/3/24 with the discontinued operations. So what I was able to go through and to do is I was able to subtract those two and come up with a 6 months ended, right? So I couldn't get perfect, meaning I'd love to see it bifurcated out, and I won't really be able to do that until the next quarter is released. But at least I was able to get some sort of detail. And that's how we went through and came up with this. And so what I am going to go through and do is I'm going to make another video that just kind of summarizes this instead of going on Bennett's accounting journey. But anyways, I want to thank you for being here today and appreciate you, and we'll see you on the next video.